Charlie Munger says that the greatest investing mistake of his life was a friendly broker called him in 1977, and offered him 300 shares of an obscure pink sheets company called Belridge Oil, which had a very large oil field in Bakersfield, California. And Charlie was familiar with this company. It was very thinly traded. There wasn't much disclosure, but he knew that at the price he was being offered those shares, at that time, I think the market cap of the company was something like $120 million or something. And the dividend yield was like 15%. It was very cheap. And Charlie said that without even doing much of an analysis, you knew that you were buying it for 1/5 or 1/10 or less of what the actual underlying assets were worth. And it was quite a remarkable field, and they owned the land. It wasn't a lease, and they owned everything underground. And so he bought the 300 shares at $115 a share that were offered. And then 2 days later, the broker called him back and offered him another 1,500 shares of Belridge Oil, again at the same price. This time, Charlie didn't have the cash handy, and he would have had to sell something to buy Belridge. And he should have sold, because whatever else he owned in his portfolio was not a 20-cent dollar or something. It was not that cheap. But it required him to sell something and then raise the money and then buy. And he called the broker back and declined. And he said that, so 2 years later, this 100 million market cap company was bought by Shell Oil for $3.5 billion. And it was like 30x or something, 120 million or something. So it was a 30x in 2 years. And at that time in 79, Berkshire Hathaway was trading at about $300 a share or something, which is now approaching $500,000 a share. So if you think about Charlie's 30-odd thousand he put in, it became $1 million in 2 years. And then it was another probably more than 1,000x, more 1,500 or 2,000x from there was the journey from Berkshire. So that million became something like $1.5 billion today. So the 30,000 in effect became $1.5 billion, 35,000. The 1,500 shares that he took a pass on would be worth something like $7.5 billion today, which I think exceeds his total net worth today. And this is the kind of like I would say, or what would I call it? I would say it's the cross connect, where you take the first company and you get a 30x. And then you take the second company, and in his case, he got a 1,500x. So you end up with 45,000x, some crazy number like that. And when well past 100x, we're not in Kansas anymore. And that was now the second company that he invested in, Berkshire Hathaway, was a great growing business. And that generated a lot of the returns because of the growth.